What is going on, everybody? Welcome back to the channel. And in today's video, I want to show you guys an easy trading strategy that you can use to make some really serious gains. Now, the strategy we're going to be talking about today, guys, is going to include the swing failure pattern. And if you guys remember back a couple weeks ago for my Sunday sauce video, I actually covered the SFPs and how to spot them on the chart. Now, that was more of an SFP 101 video where I talked about the actual candlestick pattern and what you're looking for when these occur. Now, in today's video, I want to go a little deeper and show you guys the actual strategy and how I personally trade these alongside my premium Discord, where we put all of my saucy trade setups. So we're going to be talking about four main things. I want to talk about briefly what a swing failure pattern is, but if you guys have not seen the first video I've done on the SFPs, go check that out, and I will link it in a card above and in the description down below. So we're going to talk about briefly what a swing failure pattern is, and then I want to show you guys, more importantly, how to find the levels that you're looking for this pattern to occur at, and then I want to talk about how I actually enter these trades, and we'll also go over the confirmations that I look for to add a little bit more confidence to these trades, reassuring that they will actually play out. And then obviously we will take a look at some examples of SFPs on the chart, but more specifically, guys, I want to take a look at some examples of some SFP trades that we've actually taken with my premium Discord, so I can walk you guys through an actual trade that we took and show you how it turned out. So without further ado, guys, let's go ahead and jump into the charts and talk about how you guys can make a ton of money with this super simple trading strategy. Let's get into it. So guys, here we are on the Bitcoin chart, and real quick before we jump into the actual examples and the confirmations that I look for these trades, let's just quickly talk about what a swing failure pattern is. Now, all a swing failure pattern is, guys, is the failure to break above or below a level. So in a bullish case, what you're looking for the swing failure patterns is going to be for a candle to break up above a level of resistance, and then you're looking for price to wick all the way back down and close that candle right below your SFP level. Now, for a long position, it will be the exact same thing, but you will be looking at price coming down to a level of support and then breaking below that level and then wicking up very quickly and closing the candle above that level before expecting a reversal to the upside. And again, if you did not see my first swing failure pattern video, go ahead and check the link in the description down below, watch that video, and then come over and finish up this video. So now you should be familiar with what a swing failure pattern is and what they look like on the chart. So let's go ahead and talk about how I actually trade these. And more importantly, one of the most common questions I get is, where do I find the levels to look for a swing failure? Now, I don't want to overcomplicate this, so really simply, guys, you want to be looking at some specific time frames. Now, for me, for swing failure levels, what I like to look at is anything from the 1 hour and above. But I do want to stress that this will work on any time frame, but it is going to be a little bit more reliable if you're looking at those higher time frames. Some people look at the 4 hour and above, some people look at the 15-minute, but I like to look at the 1 hour and up. And you want to remember that the higher the time frame you're looking at, typically the stronger the level or the more reliable the signal, just like any other thing that you're looking at on the charts. A swing failure on the 1 minute chart is likely not going to play out as aggressively or give you as big of a percentage move than a swing failure on a 4 hour time frame or a daily. Now, if you guys watched my first swing failure video, you will know that when I'm looking for these levels, I look at the wick of the candle. So if we're looking at this kind of range of sideways price action, what I would generally do is look at the big wicks, and this would be where I'm looking for the swing failure. Now, another really simple way to look at this is all you're really doing is trying to figure out where retail traders have their stop losses set. Now, most of the time when you're looking at a sideways consolidation like we are looking at right now on the chart, you're going to want to look at the highest point on the chart and the lowest point on the chart. Now, this is going to be the most likely or the strongest level to swing fail, or the highest likelihood of actually playing out. On this current price action we're looking at right now, you can see our highest candle or our highest wick is sitting right here at about $30,595. And then you see we have another wick down here at about $26,665. Now, these are the two most extreme points on the chart. So these are going to be where I would be looking at swing failures. Now, again, you can find these levels on time frames such as the daily or even higher such as the weekly. But for the sake of this video, I'm going to stick to this range right here. And I'm going to stick to these levels that we found here on the 1 hour. So obviously, guys, we have a range here. We have the absolute high, the absolute low. And typically what I like to do here, just to add a little bit more context to the chart, is I will pull a volume profile. So I'm going to go ahead and just pull the profile on this sideways consolidation. So the theory here is that if price were to come up and swing fail this wick up here, where price comes up, wicks above the level, and then closes below it, this is where we are going to be looking for a short position. And if price comes all the way down to our lower level, wicks below, comes back up, and closes the candle above that level, that is where we would be looking for a long position. And those are swing failures simply explained. And again, please watch my first video where I talk about what is actually happening behind the candlesticks and why these actual swing failure patterns occur. But again, this video is going to be focused more on the actual strategy. So when looking for your swing failure levels, simply put, you want to look at the 1 hour and above. Remember, the higher the time frame, typically the stronger the signal. And you just want to remember where people's stop losses are. Obviously, if anybody is short from this high up here, their stop loss is likely going to be somewhere above this high. So if price were to come up and start to crack this level, likely many people who are short from up here would be getting stopped out, creating buy pressure in the market, giving us that big wick up. And then again, once all those people get stopped out, oftentimes you'll close below the level, and that's where your reversal will come in. So simply put, when finding your levels, you want to look at the wicks, you want to look at the highest point on the chart, the lowest point of the chart, and remember, try to keep it to the 1 hour and above. And remember, once you find that level, oftentimes you can swing fail that level more than once. And when this happens, what I like to do is draw a box near that swing failure zone, right? So you can see right here, we had a wick that we kept swing failing right here. Price came up, came back down, swing failed that level, got a little bit of a reversal to the upside, and then we actually wound up swing failing it one more time before getting a bigger reversal to the upside. And then simply put, we just swing failed this level up here as well. You can see these happen all the time on the chart, although not every day. You can see we swung failed this level, wicked above, closed below, and then big reversal back to the downside. But oftentimes when you see multiple wicks down here, I like to refer to this as a swing failure zone or a liquidity zone, where you can oftentimes get a lot of swing failures. And sometimes you could see here, we came down and swing failed that level one more time. And again, you know, this is just letting us know there is a lot of liquidity down here. So anytime price likes to dip its wick right into that zone, oftentimes you will see a big reversal. And then you can see this level also got swung failed, not only here, but also here and even right here. So once you get that level, you can swing fail it multiple times. You just want to be careful of those new wicks that are created, because sometimes price can creep up and then swing fail that new wick. It's all a game of probabilities. So now that we know a little bit more about how to actually find these levels or even zones where there's a lot of liquidity sitting, making it a high likelihood reversal area, let's talk about once price gets up to this level and you start to get that swing failure on the 1 hour, how to actually enter the trade. So if I was looking at this as a live chart, what I would be doing here is I would grab my horizontal ray tool, turn on that magnet tool so we can snipe that wick with accuracy. And again, I'm going to go ahead and mark out the lowest wick and the highest wick, which is going to be right here. And then I'm going to quickly go ahead and label these SFP, so when price gets to these levels, I know exactly what I'm looking for. Simply, all we have to do for now is sit and wait for price to come up and tap these levels. And what I like to do here, guys, is although our levels are drawn on the 1 hour, as price makes its way up here, what you can do is also go down to the lower time frames and check for the SFP on those lower time frames. Because if we wait, let's go ahead and move price forward. If we wait for price on the 1 hour to come up, wick above the level, come back down and close the candle down here, you get an entry all the way at the middle of the range. But oftentimes what will happen is you'll actually wind up getting that SFP closer to the actual level that you're looking at on a lower time frame. And you can see for this example, we got this exact thing to happen if we came down to the 15-minute. So instead of waiting for that swing failure on the 1 hour and entering our trade after that 1 hour candle closes right here, which again is halfway through the range, look at the entry we could have gotten if we were looking at a lower time frame. So again, to avoid myself from getting these horrible entries, what I will do is as price creeps up towards our level and it looks like we may break out of the range and go for that SFP, what I'll do is come down to the lower time frames and watch price action on the lower time frame. And again, if you have an alert set here, you'll get notified as soon as this level gets touched, and you're not going to be coming down to the 1 hour waiting for the swing failure here. You're going to go to the lower time frames to get that sniper entry. So number one, you want to have your SFP levels. Number two, once price reaches your level, you go down to the lower time frames and you're looking for multiple things. You're looking for a swing failure on the lower time frame. You can also look for bearish divergences into that key SFP level. And I also use Lux Algo and Market Cipher for extra confirmation, and I'll show you how to do that in just a second. But in this example, guys, you can see on the 15-minute time frame, we came up, price wicked up. Now the candle body is back below that SFP level, and you can either enter the trade here on the candle being below that level, or you can wait for that next confirmation. But again, remember, if you wait for the confirmation, you're going to get a much worse entry. So what I like to do is I try to front run these levels just slightly by using other forms of analysis. And you can see here on Market Cipher B, we are not only having money flow coming to the downside, but we also have a bearish divergence here locally, again, on that 15-minute time frame. So now you have multiple confirmations here, guys. You have higher highs on your price action, lower highs on your momentum waves, giving you that bearish divergence. You have money flow coming out, which is giving you that extra confirmation that price is going to reverse. And on top of that, it does look like you could swing fail this level on the 15-minute as well, as the body of the candle is sitting below that level. And again, you want to keep checking those lower time frames, because you can see here on the 12-minute, we are getting the same thing. You have the bearish divergence, money flow coming out, as well as a swing failure pattern confirmed here on the 12-minute. So for this particular trade, guys, that would be my entry here on that 12-minute time frame. Go ahead and enter in on that candle confirmation. And then for this example, what I would be doing, because I'm such a big proponent of the volume profiles, is I would simply look to take this trade down to the POC and then eventually the value area low of the range for a 1.4% move, which is all you really need for a swing failure pattern, because there's such a high win rate. You can use a small position size with super high leverage, because you only need this tiny little 1% move to make a good profit. So let's go ahead and play price forward here. You could see a lot of times with the SFPs, you will get that instant dump, and you will get that strong move to the downside or the upside, depending on what you're looking at. And playing price forward, this would not be a horrible TP1, because it is close to a 1% move, and you're also hitting your point of control, which is going to be a likely place to get some support. So in case you were to get a strong bounce off that POC, I would probably be locking in partial profits here and then moving my stop loss to my entry, making it a guaranteed winning trade. For example, I'm just going to leave everything here and we'll let it play out the rest of the way. And you can see we got that move right down to the volume profile, or that value area low, almost to the dollar there, guys. And then this would be at that point, you can take full profit, close the whole trade once you hit that TP, or you could take profits for a second time and then move your stop loss to entry, or move it into profit and then hope for a bigger move down and just collect the extra gains. And in this example, you probably could have wound up holding it a little bit longer. You would not have gotten stopped out, almost would have gotten stopped out at entry, but then price breaks the range and you could have made a little bit of extra profit here. That's going to be basically just based off of your independent risk tolerance. So you can see here price comes on down, and you can actually see we may be going for this second little SFP level on that wick that we were looking at before. And you can actually see here, guys, there's SFPs happening everywhere, right? We came up and we swing failed that same wick that we just traded right here, and we actually swung failed it again and got another move back to the bottom of the range and below. And then we came back down and swung failed this lower level as well. So let's back it up and take a look at one of these other examples. Because we already looked at the short example, I'm going to go ahead and fast forward to this long example, guys, because what happens is you can see, obviously we have our levels marked out on the 1 hour chart, SFP level right here. But again, you want to catch your entry on the lower time frames. So let's come down to the 12-minute and see if we can catch this next trade. So you can see price is starting to break below our range here. So what I'm going to do is I'm actually going to come down to the 5-minute time frame, and you can see we're actually getting a wick below that SFP level and potentially going to close above, giving us that swing failure and a potential signal to enter a long position. So price comes down, cracks our SFP level, wicks back above, and now I'm going to move over one more candle and see if we get the confirmation. And you can see you get that confirmed swing failure right here with our bodies closing above the level. This would be your signal to enter long, and we'll actually put our stop loss right below that swing failure wick. If price breaks that swing failure wick, that is the invalidation point of this trade, and we just want to cut our losses, get out, and wait for the next opportunity. So very similar to the short trade, guys, I'm going to be targeting the top of this volume profile at the value area high right here at about $30,283. So let's see if this one plays out, and you can see here quick reversal as per usual with the SFPs. And let's see if we can go ahead and hit a take profit here. And you guys can see this one actually did play around a little bit more than they typically do. At this example, obviously, this one did kind of bing bong around a little bit more, but you can see high probability win rate. We did come right back up towards that volume profile or that value area high for our TP. So there you go, guys. There is 2 examples. Now for the next example, guys, I want to show you a swing failure setup that I actually alerted in my premium Discord, and we traded this together for some pretty decent profits, and it was a perfect swing failure pattern, and I want to show you guys exactly what I was looking at for this trade. So you can see right here, this is the trade setup that I put in the premium Discord. You can see we have this SFP level sitting right here where we were looking for that setup. Now, obviously, with these setups, I do put exact confirmations that I'm looking for to actually enter the trade, and I'm going to walk you guys through this trade right now. So you can see here, same price action right here on the charts. You can see we have this SFP level where I know it's likely that if a lot of people were going short here, their stop losses are going to be sitting somewhere above this high, making it very likely that if people are short from up here, if price does go ahead and revisit that level, we are going to stop out everybody short from above that high and then potentially get a reversal back to the downside. And when we're looking at our volume profile here, guys, at the time we were looking at this range, and you can see if we did come up and swing fail that level, we would be outside of our volume profile, which would make us expect a revisit, potentially with a rejection down here, a revisit back into that range and potentially down to the POC or the value area low. So that was kind of the theory behind this trade. And then let's go ahead and move price forward here and see if we can come up and swing fail the actual level. So you can see price is making a move up here, and it does look like we could come up to attack this SFP. So let's go down to the 1 hour time frame and see if we can get the swing failure. So you can see here we finally made our way up, got a huge candle going for that SFP level, and you can see we are starting to swing fail it here. So what we're going to do is go down to those lower time frames and snipe that entry. And remember, what we're looking for is bearish divergences on the lower time frames into that key level. Ideally, we want money flow coming down as well, and we can also look for those swing failure patterns on the lower time frames. So let's go down. I'm going to go down starting off at the 30-minute. You can see we successfully swing failed that level on the 30-minute with our candle closure below, and that confirmation of that next candle does make this level right here a valid entry. And if we come down to the 15-minute, you can see we actually swing failed this level as well. And if you come down to the even lower time frames, such as the 3-minute, it does look like we could set up here for a potential bearish divergence if price comes up and makes a higher high. And you can see here, guys, not only did we get the SFP on the 5-minute, the 30-minute, the 15-minute right here, but on top of that, you can see we came up for a retracement, and we're actually putting in a bearish divergence here on the 15-minute time frame, again, into that key level, right? You can see we're putting that 15-minute bear div into the SFP level. And again, this could have been a valid entry, right? You just would have went for a little bit of a ride. But again, for extra confirmation, higher highs on your price action, lower highs on your momentum waves. We're waiting for that 15-minute bear div to start printing. There it is. You could go ahead and enter your trade here. Not only that, guys, but over time, you can see here, money flow is also trending to the downside, right? This is also a good confirmation. You could even look at the lower time frames. Look at that 5-minute. Money flow also coming to the downside here. That is extra confirmation. And we're also getting the divergences on these time frames as well. So number one, we've swung failed this level on the 1 hour, 30-minute, 15-minute, and 5-minute with bearish divergences. And you can see now we're getting that 1 hour red dot, making it likely to come down here. So let's go ahead and hop in that position. And then again, remember, for your take profits, what you can do is, for me, first take profit for this one is going to be the value area high of the range because it's already 3.47% away. So So first TP for me is going to be that value area high. Then we'll look to get to the POC and the value area low. And again, it doesn't matter if we come down to that final TP, because once we get here and take profit, move our stop loss to our break even, it's a guaranteed winning trade. And if we get stopped out in profit, no big deal. We made money and we wait for the next setup. And doing this over time, guys, is how you can become a profitable trader. It's not about winning every single trade or having every single TP hit. Obviously, that stuff is all good and well, but you're going to get stopped out. And again, moving those stop losses to break even at the right time is going to help you increase your profitability. So you can see here, first TP, we're going to go ahead and target that value area high. And again, with that final TP sitting right at the value area low for an 8% move, you can see our risk to reward is a 3.85, which is very, very good. And again, that is one of the benefits of these swing failure patterns, is that the win rate and the risk to reward is extremely high. So let's see, we got that swing failure. We're actually starting to close some 2-hour and 1-hour candles above our SFP level, which could be a little alarming, but oftentimes you will still see that reversal. So let's see if we can go ahead and make it down to our TP1. You can see they went for that second stop out. Couldn't get us, but we wound up coming back down for that reversal. You can see coming down towards that value area high. Boom, TP1 has been hit. Now we could take our profits and then look for that next TP at that point of control. And I don't know if we wind up making it all the way back down to that point of control. And you can see right here, guys, I am actually still in this position currently. And we have not made it all the way back down to our POC, but that is our next take profit. And again, these are trade setups that we put in the premium Discord every single day, guys. Obviously, it's based off of if the setups are presenting themselves, but we are currently in this trade. It is up very nicely, and we are going to be waiting for that second TP to be hit at the point of control. And if we wind up coming up and getting stopped out, if our stop loss is at break even, we will simply get stopped out in profit and wait for the next setup. So shout out to anybody in the premium Discord in this trade right now and in profit. We've actually been in the trade for quite some time, but it was all off of these swing failure patterns. And guys, as you can see, we did wind up swing failing the level and then closed a few candles above. Like I said, oftentimes you will still see that reversal, especially when you get all the confirmations that we had on this one with the continued bearish divergences. Now, even if I were to get stopped out, right, because we entered here, even if you do get stopped out of that trade, once you put in these continued bearish divergences, as you can see right here, not only did you get the first bear div, which is what we were entering based off of, which was actually right here, then we came up one more time, and then again after that. But what happened on Market Cypher B was we were simply just continuing to put in lower highs. So this was actually a little bit of a tricky trade. I personally didn't get stopped out, but it is very possible that you can get stopped out, and this could technically invalidate the swing failure. But again, this is the power of the confirmations, guys. When you see these continued bearish divergences coming in with money flow continuing out, it makes it very likely that if you re-enter the trade, you can eventually get that big move down. And what I will do a lot of times is actually ladder into these trades. Add a position right here on the first div, and then on the second drive of divergence, add a little more. And then on that third drive, as long as momentum and money flow is continuing to come out, you can add even more to the position because, again, this is still showing a discrepancy and a high likelihood of reversal, even though this swing failure pattern technically got invalidated after all these candles came up and closed. And if you come up to the higher time frame, you can actually see this actually wound up being a swing failure on the daily time frame almost perfectly, right? So you can see right here, we actually swung failed this level beautifully on the daily, and look at that. Swing failure on the daily oftentimes leads to a big reversal, and this is a big part of why we were looking to take this trade. And like I said, guys, Market Cypher B makes for great confirmation. I also look for entry confirmations on things like exo charts. That's a really big one, but that's a little bit more advanced, so I teach that a lot more in the premium Discord. But nonetheless, guys, this is a super, super profitable trading strategy, and the premium Discord knows that. But I wanted to share this with the CandleMafia to show you guys how I actually trade these SFPs. And like I said, you can also use Lux Algo, which really conveniently, guys, does mark out the bearish divergences for you. And you can see here, even on the 1 hour time frame, not only did you get that first swing failure, but as you continued to creep up, as price was trying to stop you out of that swing failure, you could see right here on Lux Algo, automatically Lux Algo is marking out that divergence with this gold line, letting you know, hey, bearish divergences are still forming. You may be able to catch that trade back into the range. And Money flow is also coming out on Lux Algo as well. So just many, many ways to confirm these trades, guys. But simply put, look for the swing failure levels on the 1 hour and up, wait for price to approach that level, and then go down to the lower time frames, and you're looking for bearish divergences with money flow coming out on the lower time frames. And you can also spot those SFPs on the lower time frames as well. So guys, I think that's all the time we got for today's video. So just to recap really quickly, you're going on the 1 hour and up to find those swing failure levels, and keeping in mind that you're looking for big wicks where people are likely in trades, and you're trying to figure out where everybody's stop loss is, because that's what a swing failure pattern is. It's simply just a liquidity grab. So finding the levels on the 1 hour and above, waiting for price, sitting on your hands and waiting for price to come into your trap, your key level, and then you're going down to the lower time frames such as the 30-minute and down, and you're looking for bearish divergences, whether you're looking at Lux Algo marking them out for you, or you're looking at the RSI, which is a free indicator, or Market Cipher. You're looking for those bear divs into that key level on the lower time frames with money flow coming out, and you can also look for those SFP levels, and if you're using exo charts, you can use that as well. And if you're interested in learning about that and getting these trade setups sent to you in Discord, you can check out the links in the description down below to all these indicators and the premium Discord as well. And with all that being said, guys, go hit the charts, go check out these SFPs, go into bar replay mode, mark out those levels on the 1 hour and above, and simply watch price action play out. Try to find these swing failure patterns in bar replay mode, see how they behave, practice with your paper account, or just using the position tool on TradingView like we did in this example. Go test the strategy for yourself, and then if you find it profitable, go ahead and drop some money in that trading account. And with all that being said, guys, that's all the time I got for this tutorial. I hope you guys liked the video. Smash that like button if you learned something, and hit that subscribe button so you don't miss any of these awesome tutorials, trading strategies, or urgent market updates that we upload to the channel. Until next time, guys, that's all the time I got for this video. I'll see you in the next one. Frankie Candles out.
Here we go, at the top of the class on a roll, and it's time to run it up, yeah, you know. Maxed out, put the pedal to the floor, ayy, on the road, here we go, yeah, we winning by a landslide. Never see me coming, I'm a landmine. Yeah, I ain't taking orders in command, like, yeah, you about to see me on demand, like.